Hello Tesla fans, investors, and curious minds. Welcome back to the channel, and today we're diving deep into the highly anticipated Tesla earnings report. But before we get into the nitty-gritty details, let's take a look at the Tesla stock graph year to date. And as you can see here in the picture, the stock price has taken a beating here year to date, and the stock has moved down roughly 24.3% here in the first month here of the year. So quite a shocking start here for the Tesla stock, considering that many of the other tech stocks has actually done pretty well so far in 2024. As you can see, the Tesla stock has been on quite a journey recently. The stock has experienced some ups and downs, leaving many investors on the edge of their seats. Now let's explore what might have influenced these movements and what the future holds for Tesla. But first, if you haven't already, make sure to hit that subscribe button and ring notification bell here for more content similar to this video. All right, now it's time for the numbers, and we'll start with the net sales here for the company. And we can see here on the right side that the company did produce a 25.1 billion here in the quarter. However, that's only an increase of 3.5% here year over year. So it's a little bit lower compared to that of what they had previously here. We've seen, strong double-digit numbers here for many quarters, but now it's kind of on the decline here. We've seen also the Q3 for 2023, where the year-over-year growth was only 8.8%. So we can see that this company is slowing down a little bit in terms of net sales here. And if we do break down the revenues a little bit here, you can see that the total automotive revenues here accounted for 1% here year over year on the right side. And the energy and generation and storage revenue here was 10%. The service and other revenues were up 27%. So the other two business areas here were pretty strong. However, the core business areas here, which is the automotive revenues, were actually a bit slow or weak, I would say, here in the quarter. But so this kind of explains why the revenues weren't stronger than 3.5% here in total. Now looking here at the gross margins, it's another disappointment, I would say. They had a 23.8% gross margin here in Q4 2022. Comparing it to today's gross margin here at 17.6%. And they did achieve a 29.1% gross margin here in Q1 for 2022. So the gross margins have been under attack here for 2023. That's what I can see at least. And as you probably picked up here on the previous slide, you can see that the total gross profit here was down 23% here year over year. It's never a good sign when the gross margin is down, because that often gives us some clues on what's going to happen here on the other margins as well, as you'll see here pretty soon. So Tesla did produce a $2 billion worth of operating income here in the most recent quarter. However, that's down about 50% here, I would say, compared to a year ago, where they produced a 3.9 billion here. So quite a big drawdown here as well, but it goes kind of hand in hand. When you see that the gross margins are down so much, then obviously the operating income will probably be affected, as we can see here as well. And now for the operating margin, as you can see, it paints exactly the same picture as we saw previously. They go hand in hand. So currently they have a margin here of 8.2%, which is down from about 16% here year over year. But before proceeding, I think it's kind of important to just compare some of the other car manufacturing companies in the world. And here you can see a table of some of those, where we have Volvo, we have Volkswagen, we have Toyota, we have Stellantis, Mercedes, and so on. And here you can just see quickly some of the KPIs here presented in the picture. And you can just see that Tesla has quite some high KPIs here compared to the others. Obviously, Tesla's not paying a dividend, but just look at the PE ratio, even the PS, even the EV to EBIT, and you can see that Tesla stands out as one of the companies here which is kind of highly valued here, or perhaps overvalued, if you will. But I think it's just interesting just to compare them a little bit towards the other peers. But obviously, Tesla has a lot going for them, with the battery production and some other fields here that they're venturing within. So I think Tesla could be a different breed here compared to the other companies, but it's just interesting just to quickly see the other evaluations here. But before bashing too much about the operational performance here of this company, I think it can be good to mention that Tesla were not profitable on a operating level just a few years ago. So I think they've done tremendous, development here in the most recent years here, to bring the company to a level where they can actually, on a operational level at least, not make any losses. So I think that can just be good as a reminder, to remember that it wasn't too long ago where they did have a operational loss here. So now for the production models here, and we can see that the Model 3 and Model Y were up 14% here year over year. We can see that the other models, which includes, for example, Tesla Model S, Plaid, and probably also the Cybertruck here, were down 12% here year over year. However, the total production here were up 13% here year over year. Total deliveries were up 20% here year over year. Now, some disappointment here would be the solar here, the solar deployment as they define it, which is down 59% here year over year, which is quite a lot actually compared to what it once was. However, we did see some improvements here, or actually big improvements here in the storage deployed here, where we could see that they increased the number here by 30% here. And it's been pretty consistent here, as you can see, for the other quarters as well, where they have actually been growing pretty nicely here. I think one of the most important things here on this page would be actually the supercharger stations and the connectors. And the reason why I say this is because there's so few of these installed across the world that these are very sought after, and these actually goes into the services and others in the statement of operations, where they currently make about 2.1 billion or almost 2.2 billion dollars here. So this segment is growing pretty fast, and as we can see here, it's very good that they're deploying more, because at the end of the day, I think this could be a business where they could make a lot of money in the end, because not a lot of other car manufacturing companies are doing the same here. So this is certainly one of the areas where Tesla stands out a little bit and can be unique in the business to offer something to other customers other than just Tesla drivers. And now we're going to look at the cash flows from this company. We can see that the cash from operations here have actually increased here year over year. So they're currently printing about 4.3 or 4.4 billion US dollars here in the most recent quarter. So that's pretty good, I would say, and it's certainly better actually compared to the Q4 2022, where they produced a 3.3 billion. So it's almost 1.1, or actually it's 1.092 billion here to be exact here for year-over-year performance. So I would say that's actually a pretty nice performance here from Tesla, that they managed to improve this, considering that the other figures here that we saw previously were pretty bad actually year-over-year. And Tesla is also including some vehicle capacity here in their latest earnings report here, so we can see the different market share here also compared to some other countries and regions. So we can see that, for example, in the US, they have a 4% market share together with Canada here. However, we can see in Europe, it's less than 3% and actually on a small decline here. Whereas in China, they are still improving here, just slightly above 2% here, as you can see on the bottom right of the picture here. And we can also see here actually in Shanghai that they're able to produce almost more than 950,000 vehicles here a year. So, they have massive capacity here in China to produce a lot of cars. Theme here, we can see that in Texas, they are able to produce more than 125,000 of the new Cybertruck here, which has been, pretty hyped here for many, many years here. And we can also see here that they are including Tesla's Semi here as well, but currently no full production here, as you can see, but rather just a pilot production here, as they have written here in the report here. So pretty interesting to see, but as you can see, it's certainly the Tesla Model 3 which is the most sold vehicle here, and also the one that they have most production capacity for as well, as it is the most popular one, as we saw previously here on both production and deliveries here in 2023. And the company is actually giving us some outlook here for 2024, which is kind of nice. So this is provided here in the earnings report here for 2023 for the Q4 report here. So first of all, we have the volume, then we have the cash, profit, and product. And I think the most important here is the volume here, where they're telling us here, investors, that in 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle at the Gigafactory in Texas. In 2024, the growth rate of deployments and revenue in our energy storage business should outpace the automotive business. They're also telling us here concerning the cash that they will have enough cash basically to fund the roadmap and whatever investments they need to do here, at least in the short term. They're also telling us here in the profit line here that over time they expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. So they're pushing here on the AI to, drive the profits in the future. It's probably autonomous cars and so on that they'll probably make some more money from. And concerning the product here, that they will ramp up the Cybertruck production here. You remember they probably made around 125,000 or something like this that they had production capacity for, so they're probably going to have to ramp that up to make sure that they at least sell those, but hopefully more in regards to their sales here. And don't forget to like the video and subscribe to the channel if you haven't. I think it's worth mentioning, even though I don't hold a position myself in Tesla, I'm just, super excited about what they will bring. And I think that they've done something which is just tremendous, that they made a footprint here within the car manufacturing business, which is one of the most competitive business in the world. So I think that Tesla has done really well for themselves to actually put themselves on the map here, and they are the first mover, and they have the first mover advantage here as well, and they're producing very nice cars with very nice batteries. The only downside that I think that they have is probably the quality, because it's just too minimalistic just on a personal note, but they have a great success and a very successful business here. Another picture here you have on the right side, you have the old Model 3, and on the left side you have the new Model 3. So quite a nice update, I would say, and certainly the lights looks much better, or headlights here, as you can see on the left picture. And now for some stock predictions here based on the analysts here, and we can see that the analysts on average think that the company should produce a $3 a share here in 2024, and that puts the company at a P ratio of 61 times right now. And doing the same exercise here, but for 2025, where the analyst predicts here on average that the company will produce a $4.19 a share. That means that the company is currently trading on a 44 or 45 times PE multiple here for 2025. But we also have to remember that, even though the P ratios might look very high today, we have to remember that Tesla has been a company that has taken a lot of investors by surprise here. And it's never impossible that the company can do so again, that they can surprise the investors by creating a lot of earnings per share here going forwards, because we have to remember that they have other businesses other than just producing cars. As we saw here in the report, also they're producing some Tesla chargers, they're producing the services business, which is kind of strong. They also have the battery business that perhaps they could expand to other car manufacturing companies that we know struggle with the battery capacity and the battery situation as a whole. So I think that Tesla has a lot of other markets that they could explore if they wanted to as well. And I think it can be good to mention some risks here regardless, and I think the biggest risk that this company faces is certainly competition from other companies, and we've seen that Volkswagen, Volvo, General Motors, and many other companies are full throttle here when it comes to the electrical vehicle production here. So but I still have a lot of admiration for Elon Musk, and I think that he can probably innovate something very special. And we have to remember that he is, a big shareholder of the company still, so he still has a lot of skin in the game. And I just think it's fantastic that he's still around and still innovating for the company and still driving the company forwards, actually. I think one of the important things here that Tesla are doing right now is the robotics. So they managed to, produce robots within their manufacturing facilities. But I think if they can do these very well, I mean, that could be a market as well for Tesla to sell robotics to other companies, obviously, and make a ton of money from that. Because, I mean, obviously having a robot doing a human's work. I mean, that's basically working 24/7 and taking no breaks and no nothing, and probably will do the work more reliably compared to a human. But I think the biggest potential here that Tesla faces within, the next 5 to 10 years, obviously there's going to be a lot of regulations and so on, but that would be the autonomous self-driving cars, that could replace taxi drivers, that could replace bus drivers and so on. Because, I mean, right now you're occupying a seat just to drive somebody else, and if the car could drive itself, then obviously, the taxi companies and bus companies and so on, even the truck companies could, replace one of the drivers and just, drive the goods instead and humans instead and so on. So that's a massive market that, Tesla could come in and conquer if they have the potential or possibility here going forwards. But I think it's going to be a lot of regulation that's probably going to, slow this down. So, and just to end the video on a positive note here, so Jim Cramer doesn't think that Tesla should be included in the Magnificent Seven group. So, I mean, that should be a positive signal, if anything, because, you always have to inverse this guy and you'll probably end up with the correct result here. So it could be the case that this will fuel the stock, going up further here from this point of view. So we'll see. So thank you anyways for watching, and see you in the next video. And don't forget to like and subscribe.